young people who felt alienated from the financial crisis. There was a small group of them initially who kind of found an outlet in the markets. They were skeptical of Wall Street, and they were skeptical of the financial system, but they also, I think, realized that when you get in there and get your hands dirty in the stock markets and in the options markets, you can kind of learn something about the system that you distrust.
Welcome back to the Bullish Studio Podcast. I'm your host, Brian Hanley. Joining us today is Nathan Popper, an acclaimed journalist at The Information, previously at the New York Times, an author known for his insightful and thought-provoking work on the intersection of finance and technology. Nathan's previous book, Digital Gold, was a deep dive into the world of Bitcoin and cryptocurrency, earning widespread praise for its in-depth reporting and engaging storytelling. Now he's back with a brand new book titled Trolls of Wall Street. In Trolls of Wall Street, Nathan explores the fascinating and often turbulent world of online communities and their impact on the financial markets. We're thrilled to have Nathan with us today to talk about his latest work, the stories behind it, and what he sees as the future of finance in the digital age. Please ensure that you're subscribed to our channel, and please let us know what you think about this interview in the comments. Without further ado, please welcome Nathan Popper to the show. Nathaniel Popper, thank you very much for taking the time to join us today on the Bullish Studio Podcast. It's a pleasure having you here. To kick off, I think it'd be helpful to just explain to our audience a little bit about who you are, what you've done, and what your latest endeavor is.
Sure. Well, I've been a journalist for 20 years, and much of that I spent at the New York Times, where I covered Wall Street and technology. And that job brought me into the orbit of Bitcoin relatively early on. 2013, I started covering it. And as a result of that, I wrote a book called Digital Gold, which is about the origin story of Bitcoin and crypto. And since then, I've been writing for the New York Times. I moved out to the Bay Area to cover technology a little bit more. And that led to this newest book, which is called The Trolls of Wall Street. And I got going on this around the time of the first GameStop surge back in 2021. And I have been working on it since then. And it tells a story that tells the GameStop story, but it also tells a much broader story of, how essentially we got this new generation of particularly young men who are so obsessed with money and trading and finance and just this whole online world, online community that is sort of unlike anything that existed before. And so The Trolls of Wall Street, my new book, tells the story of that, how we got from essentially Occupy Wall Street to Wall Street bets.
Totally. That's great. And I think, speaking of Occupy Wall Street, 2008 until, relatively present day, obviously there was a bit of a quiet period there. But then I'd love to, hear a little bit about, what is a troll of Wall Street? Are they the Occupy Wall Street folks, or are they a different group of people? What have you seen?
That's a great question. And they are, to some degree, the sort of shifted version of Occupy Wall Street in some sense. Occupy Wall Street was this movement that came about after the 2008 crisis that represented the extreme dissatisfaction, distrust with the financial industry and the way it had, created this crisis that had such an impact on so many Americans. And, coming out of that crisis, there was it led to this sort of alienation and distrust of the traditional sources of authority in America, the world of Wall Street. And, Wall Street bets began in this moment where young people were totally had removed themselves from the markets. There were a lot of articles back in the years after the financial crisis that talked about the sort of death of retail trading, the idea that that was something of the past. And what's so interesting is the way that people, young people who felt alienated from the financial crisis, there was a small group of them initially who kind of found an outlet in the markets. They were skeptical of Wall Street, and they were skeptical of the financial system, but they also, I think, realized that when you get in there and get your hands dirty in the stock markets and in the options markets, you can kind of learn something about the system that you distrust. And there's something better about understanding the system you distrust than knowing nothing about it. It's kind of like keep your friends close and your enemies closer. There was an element of that where people wanted to understand this system. People had realized how important the markets were to the economy and the functioning of our society. And people wanted to understand that. And so, it began with this small community of guys. I tell the story of Jamie Rogozinski, who created Wall Street Bets. And, that was a big part of his motivation. And it sort of grew from there with all of these layers added onto it. It obviously, one of the big layers that got added on was the invention of the creation of the Robinhood app, which sort of changed the way that people engaged with trading. It made it more user-friendly, made it more approachable. And it sort of grew from there till, that it started in 2012 and it grew till, COVID began in 2020. And suddenly this became this like national pastime. And so it was this slow evolution to where we are today, where it's just something that millions of people take for granted as a part of something that young people do. Totally. And that's so different than where we began back in 2012.
Yeah, 100%. And a stat that we, mention a lot here at Bullish Studio is that since 2008, surprisingly, based on, studies that are published by FINRA and others, financial literacy in this country has not made a meaningful shift up or down. I mean, if anything, it's gone down slightly. But then retail equity ownership, like ownership of stocks, has gone up quite a bit, especially in the last couple of years. So there's this really interesting argument. While yes, there was a lot of degenerates coming in, but also that might have been the first stock that somebody bought, and that introduced them to the markets. And whether it was a stock option or a crypto, that is their first interaction with the financial system. And then they start to learn, and then they become informed, and then they're participating in the system that I think institutional Wall Street has been capitalizing on for decades. So I think that's
a great, I think you laid out very nicely there. And I think that's something that a lot of people miss, is the fact that, it sort of starts as entertainment. It starts as sort of fun, and it starts with this degenerate attitude of like, I don't care, fuck it. If I lose this $100, what's it to me? It's no worse than like gambling on a basketball game or going to the casino. But I think what happens after that initial interaction is often a process of education that is missed by the outside world. People learn about the system and they get smarter, and often they do figure out how to become smarter investors. Sometimes that means leaving behind the sort of degenerate plays. But that often remains a part of this world. Like, there are a lot of people out there. Jamie, who created Wall Street Bets, is this interesting example of somebody who got started with options, got started losing money on options. I mean, options are a particularly risky part of the markets. And those losses sort of led him to rethink his investing. And he, put a lot of his retirement savings into index funds, sort of safe long-term investments. But at the same time, he put aside a pool for himself to keep playing in the markets and keep trying to figure out, like, how do you make it work if you're trying to trade? What are the big guys doing? How can I emulate that? How should I not emulate that? And that sort of, again, that process of education is something that I think is easy to miss.
100%. And I think you touched on an interesting point where, as I'm a 34-year-old that, grew up and I was, looking for a job right, in the heart of the financial crisis. And, as I've grown up in my career, one of the things that is constantly kind of like beaten down to us is like, get your 60-40 or 80-20 portfolio, set it and forget it. Don't think about investing. But one kind of like counter argument that I have around that is that I think more people generally need to understand their risk tolerance and be able to like experiment with that a bit. And I think that, having some form of money that you can set aside from your larger assets that you own or like your net worth is really valuable because, you should blow up your account. I think at one point in your life early, you should have losses so that you can understand and learn from those and then become a more informed investor overall. And institutions blow up their funds all the time. And, it's just a learning experience. So,
yeah. And that's, part of the idea with investing and trading has always been that it's when you're young that you can handle losses.
Right.
You are supposed to take risks when you're young because you're more able to weather that. What you don't want is somebody who knows nothing about the markets trying some get rich quick scheme when they're in their 50s and this is their retirement funds and they're 10 years away from retirement, and if they lose it then, that is a whole lot more that's a whole lot more dangerous to them and to society than some 20-year-old who's just getting into this for the first time and is learning how the markets work. That's what being young is supposed to look like. I'm curious, Brian, not to turn the table, but I'm curious for you, what it sounds like you have gone through something of this process yourself. What was your initial, I'm always so interested to talk to young. I'm 45, maybe I'm a little bit in this camp, and I feel like I've been spending my time in this world. But each time I get to talk to somebody who has gone through this themselves, I'm so interested to hear, what was it that initially drew you in? Was it that, what got you first involved?
The thing that it was most profound on my like wider investing journey was that, when I was in high school, my dad gave me access to some side IRA account that he had with 5 or 10 grand in it. And he basically like let me go and play with it. And that was right around the time that Google was about to go public. And I basically took $5,000 or $10,000, whatever was in it, and just put it all into Google and proceeded to watch Google triple over the next couple of years. And that ultimately afforded me to buy my dad's used car from him, which then gave me like a real tangible asset. And from that moment on, I always had a kink for the markets, but I was working full-time jobs and I never really had the time or energy to spend investing, had my 401ks and whatnot. And funny enough, like graduating college and, even being a little bit mid in my career, I heard about Wall Street Bets from a coworker in probably 2018, 2019, and really started to see a whole different pocket of a community of people that it's funny because like I'm a big proponent of like, like be careful with how folks kind of categorize retail investors and these communities, because in those communities, the type of like early Wall Street Bets, the level of sophistication is actually like quite high. Now, the level of like speech in that and how they refer to things is totally degenerate, but I don't think it's that different than what happens on Wall Street already between firms. Like they are degenerates, when you look at, the Archegos fund blowing up, like you see these things like these, everybody has a little bit of degeneracy in them. And I don't know, I grew a passion for it. And then that ultimately led me to learn and taught myself how to trade stock options, which I learned from, some media folks, and obviously went down a whole rabbit hole there, but it really helped me educate myself.
How did that end up going for you? Did you have to like pay the tuition at some point and realize?
Oh yeah, 100%. Yeah. I lost so I was doing like some complex strategy around selling option premium, and the whole kind of just from a folks who don't really understand what that means is that I'm basically selling insurance to people, and you're picking up nickels in front of a steamroller, and one day that steamroller hits you, and that hit me. So my gains that I had from the year of that portfolio were wiped away in basically 2 days because I did not have, and ultimately though, I think it was a really profound learning experience for me, because what I learned through that is that I am a better person when I focus my energy on things that I can be productive for, and nobody gets rich trading. Like nobody gets wealthy trading. I mean, yes, in theory you can, but like starting with a $10,000 or $20,000 brokerage account and getting wealthy from that is basically doesn't exist. And the time that I felt putting into it, I was not really getting back. Now I did learn a lot about how the market works, but
Yeah.
I mean, yeah, I'm a big fan of
that's one of the. I mean, a couple of things about what you just said that really resonate with the story of Wall Street Bets. I mean, one thing about Wall Street Bets that the sort of memorable line that I think sums up a lot of what happens there is, this kid who was going through this process himself and said, a lot of the dumb people on here are really pretty smart. Like they look dumb, but like even in the dumbest moments of Wall Street Bets, even in the sort of most degenerate moments, there was this strange understanding of the markets that lurked beneath all of the trolling. I mean, and it's, to a degree, that's what trolling is. Like trolling is about doing this thing that looks like a joke, but actually there's something really serious underneath the joke. And
100%.
that is like that's what Donald Trump has done. His candidacy began as what everybody thought was a joke, and then all of a sudden he's the president of the United States. And I'm in 2016, I tell the story in my book about how Wall Street Bets became intertwined with the people, with Trump and our / the Donald. And, Jamie, who had created Wall Street Bets, identified very early on, like Trump is everything we are on Wall Street Bets. He is this troll who is both like, sending up the system. He's like a satire on the system, but he also has this like, appeal, this broad appeal that is easy to miss if you just focus on the sort of joke on the surface. And that is what trolling is. And that's what makes this whole system and this whole world that's emerged so confusing and complicated, because it's two things at the same time. And I think so, you have people being really dumb and really smart at the same time. But you also have people losing when they're able to do that in a way that leads them to make smarter decisions. And I think part of that is being honest about the losses, right? I mean, one of the things that was so unique about Wall Street Bets in this story was that it was a place where you could go on and talk about losing money. The sort of traditional idea of day traders and like the old message boards in the 90s, they were all about people bragging about how they'd made money. They were bragging and trying to get other people to copy them. And that really is kind of unhealthy, because you get this sort of misshapen perspective on how many people are winning. You think everybody's making money. And Wall Street Bets was very different. Wall Street Bets from the beginning was about like, we're going to talk about our losses and be honest about it, and maybe, make fun of ourselves, call ourselves degenerates. But when you talk about losses, you offer an opportunity to learn from them. If you're going to be honest about your losses, people won't come away thinking like, oh, this is easy, I'm going to get rich overnight. You realize how hard this actually is.
And to take a quick turn for a second, I know in your original book, Digital Gold, you profiled the Winklevoss twins. Did you go to college with them, or were you there at the same time?
I was there at the same time. I didn't know them in college, but that was actually, I mean, the way I began reporting on crypto was a story that I wrote, the first story that sort of outed them as significant holders of Bitcoin. I wrote a story back in early 2013 where they had not previously publicly identified as crypto owners or crypto holders. And they came out and said in the story, we've assembled what we think is something like 1% of all the outstanding Bitcoin, and we believe in this. And they were sort of the first people to the first people who had a reputation from a different world who came out and said, I believe in crypto. Before that, it had just been a bunch of degenerates and, Silk Road users. And so that was like the story that got me started talking with them. And in Digital Gold, I told their story, their sort of journey through crypto.
Yeah, that's been really interesting. And also up until what was it last week when they announced that both of them individually are going to be giving $1 million in crypto to the Trump campaign. Trump just came out and announced he's speaking at Bitcoin Miami. What do you take on how Bitcoin has been politicized around, in the history of your reporting on the matter? What do you see going into this election cycle? Is this all smoke and mirrors, or do you think that there's a meaningful change that's emerging if Trump does get back in office?
I mean, I think that crypto has always been has always been attractive to a world of people who really did not trust the status quo. I think that they're the sort of polite people who are just investing in it for the gains, but it's so hard to get involved in crypto and not sort of buy into this narrative that the old world is broken and we have to build a new one. That the Bitcoin is this sort of fundamental challenge to the old system, and saying like this basic building block of society, your money, doesn't work and you need a new one. I mean, I think that is I can see the appeal of that. I think it's a dangerous philosophy. It's this idea that chaos is the answer. Chaos is the way to fix things. And I think that's very much where Trump comes down as well. Is he's like a chaos monkey who sort of just wants to fuck with the old system and break it. And I think that it's not surprising that crypto and Trump have become intertwined. I certainly don't think everybody who's into crypto is a Trump supporter, but I think it's easy to see how these things come together. And it's been such a big part of the history of this whole world of online money.
Oh yeah, especially when you hear a lot of the Bitcoin maximalists and the real OG guys that are trying to take a country over themselves, have a sovereign area, and you're like, what is going on here? This is some radical thinking. But yeah, it's definitely been interesting to watch. You were a co-producer on This Is Not Financial Advice, if I'm not mistaken.
Yeah, I worked with the guys who created that.
Cool. Yeah, because we were involved a bit in that as well. And I think what was exciting about that film, and I'm curious how you kind of see this, This Is Not Financial Advice obviously covered, unique stories of individual people who have gone through the last couple of years and seeing their financial experience and tapping into different communities. How do you feel these online communities are being represented? Do you feel like, is Wall Street Bets a net good for society, or do you feel like they shouldn't exist? Where do you kind of stand on these communities?
I mean, I don't think I can say I think it should not exist. I mean, it feeds this need it feeds this need of people who feel, I mean, I think in many places left behind, of course, as I've said, who feel distrustful of the way things work today. And, Wall Street Bets has been a place where people are encouraged to be honest about what they're doing. And I think there's a real virtue in that. I mean, that was part of the original sort of philosophy of Wall Street Bets, and it's really been maintained over time. And it's been interesting to see how that has sort of split off from other segments of the community. After the GameStop run up in 2021, a lot of what you might call the GameStop maximalists, you just as you have Bitcoin maximalists, there are now GameStop maximalists who think that GameStop, is being manipulated as part of this sort of Wall Street conspiracy. And those people pretty quickly made to feel not welcome on Wall Street Bets. Wall Street Bets basically said, like, listen, man, people are here to talk honestly about their investments. And when they lose money, they're encouraged to be honest about that. And, there were these interesting crowdsourced research efforts that went into GameStop early on. But when it turned into this sort of conspiracy theory about about Wall Street trying to, kill this company and screw over the sort of ordinary people, it did turn into a conspiracy. I mean, it was a conspiracy theory. And it's been interesting to see how, Ryan Cohen and now Roaring Kitty have sort of gotten drawn into that. But Wall Street Bets, the moderators on Wall Street Bets basically said, like, that's not us. That's not for us. And so it created this schism. People went off. The super stonk is like the most sort of visible, voluble representative of that community, where the whole community and culture gets built around these ideas about GameStop. And I think that is dangerous. And I think it is interesting to see how Wall Street Bets has sort of rejected that and said, like, if you want to talk about that, go to some other subreddit. But, I think beyond whether it should or shouldn't exist, I mean, to me, it's just this world that you have to understand if you want to understand where we're going. It's like, right. There's a tendency in the media to say, like, Trump is like impolite and, goes against our values, so we're just not even going to engage with it. And I think that only leads these worlds and the distrust to grow larger. And you need to understand this. You need to engage with this if you want to understand how people are thinking about the world today.
Yeah. And it's interesting that you bring up the super stonk kind of like post GameStop maximalists, because as we've followed this area closely, and we actually had Dave Lauer on the podcast previously, who, runs an advocacy firm focused on helping, push back against a lot of the narrative from, Citadel and others. But when you look at some of these issues around like direct registration of your shares and failure to deliver, with naked shorting and stuff, to me, that's where this entire conversation comes to a head with, the institutional Wall Street rules that just they're not like caught up yet. And that, I think, allows some of those conspiracy theories to run wild when people are sitting there scratching their head around how can you have more than 100% short interest on a stock? And you're like, how does this work? And then that's kind of where I think you see this like push against Gary Gensler. And then it becomes a real political issue of like, why can that stuff still exist? And that's Wall Street just playing games. I don't know. It's an interesting.
Yeah, I mean, I think it is the opacity, the lack of transparency from Wall Street that has created this situation. I mean, that is what created the distrust to begin with. But to some degree, I think like a lot of this comes down to just like the complexity of the systems that we rely on, and these are almost by nature complex, opaque systems. I mean, if you like try to understand how a single stock, you buy a single stock, like how that trade actually happens. There's 5 different participants involved, and like each of them is paying a different price. And to some degree, that system is like just a product of how complicated our world is. You have stocks trading on different continents at different times, and I don't know what to do about that, but that we live in a world that's so complicated that no one person can understand it, and that is where a lot of the distrust grows from. And that is where these efforts to sort of simplify things say, like, okay, just let's go to a blockchain based system where you are directly transacting with, there's just 2 people and there's an atomic transaction where both things are transferred at the same time. I understand the desire to go for that much simpler system, but the world has the structure that it has, and I don't know that it's as easy as just, getting rid of it overnight.
So a couple of last quick questions while we wrap up here. Do you own crypto?
I was essentially not allowed to when I was at the New York Times. The understanding had always been like, if you cover a company, a stock, you can't own that stock in that company. You will develop an interest in whether that company succeeds, and it will color your coverage. So that decision was made pretty early on. At the same time, we sort of said, I can have enough to sort of play with it to understand how it works. It's hard to cover if you don't understand how it works. If you don't understand the basics of like how a transaction happens, what it looks like on the blockchain when a transaction goes through. So I made that argument and had little bits. Once I left the New York Times, I got sort of released from those strictures. I also wasn't covering crypto in the same way anymore. And so I felt like, okay, I can own some. I have tried to keep it to a sort of small part of my portfolio. I have not like gone all in, but I do think it feels like a bet on a particular version of the future that does not is significant enough that it's worth betting on. So
yeah. And to that note, has your reporting on these online communities like changed your investing philosophy, or are you very much like an index fund, throw it in and just let it sit, or have you made a noticeable impact or noticeable change in your personal strategy?
That's an interesting question. I mean, I think going in on crypto, investing in crypto has been something of, I mean, and it's not a big investment, but it's a recognition that this is not unlikely to be a part of the future. And I think sort of thinking more speculatively about the future is something that this community does. It's not just about, what's the revenues and free cash flow this quarter. It's about realizing like the world is changing, and so if you want to, like, investments are about what's going to happen in the future. They're not about what's necessarily happening right now. There's some bet on the future being different than the present. And I think that way of thinking has gotten more into my mind as an investor, but also into, obviously, like right now, the big story is like AI and how AI is going to change the economy. And that's not a bet on like how these, chatbots work right now. That is a bet on the world changing. And I think that is very much built into this new world of online money.
Yeah. And it was interesting hearing a lot of this like kind of gossip around like AI meeting financial markets. And I was reading a bit about when, the online brokerages first really started to gain some traction. And there was this whole thought that with the invention of the internet and everybody having access to markets, it would actually lead to less volatility because all the information's out there for everybody. And in fact, it actually led to the opposite. And I think I'm very curious to see what happens when AI start running index funds and others. Is it going to lead to more volatility, more craziness, or is this going to stabilize things? And
yeah, I mean, that's sort of similar to the argument that, there was always this idea that as Bitcoin got bigger, it would become less volatile. And I guess I don't know where the latest research on that has been, but certainly as it grew, the volatility did not go away. This is still a very volatile asset. When your investment is about some bet on the future, that is sort of by its nature going to be a very volatile proposition.
So the trolls of Wall Street. Where can we find more information about it? Where can we get it?
Yeah, well, you can obviously get it at your local bookstore or Amazon or Barnes and Nobles, anywhere else you buy books online. I mean, the audio book's out with a great narrator, and I've got a bunch of stuff on my website, nathanielpopper.com, about my new book, my old book, the movies that I've done. But yeah, Trolls of Wall Street is occupied me for the last few years, and I think it's an important story that easily gets sort of overlooked.
What are you seeing percolate up now? You mentioned AI. Where do you have your eyes on next from an online community, or is the GameStop story still not over yet?
Well, I don't know. I think part of what's interesting about this latest eruption of GameStop is that in broad terms, retail traders have sort of moved away from meme stocks. I mean, there is still a very dedicated crowd that is focused on GameStop and super stonks. But that has become a smaller part of the overall universe because of this process of education that we're talking about. People have shifted from focusing on meme stocks to thinking about the broader stock market, obviously AI stocks. To me, I mean, AI feels like the most interesting thing going on right now. And so that's where I'm spending a lot of my attention now, just trying to understand. Yeah. And of course, that is not necessarily a world of online communities upstarts. That's a world of the giants, to to make these frontier models, you have to have, billions of dollars. And so it's a real shift away from this, world of startups. And I guess it's going to be interesting to see where that ends up.
Everybody's following NVIDIA, and their impact on the markets is profound. Readjustments happening to indexes because of that. It's really wild to watch how fast these things happen. But Nathaniel, thank you very much for joining us on the Bullish Studio podcast. Please go check out his latest book, The Trolls of Wall Street. Check out his website, shoot him a follow. Nathaniel, thank you very much for taking the time to join us today.
Thank you so much for having me, Brian.
Cool. Thank you.